Hey guys, Chris from Adapt Tuition here, and in this video I'm going to show you the solution for question 2 from the May 2008 PoA Paper 2. If you want to see the solutions from the other questions on this paper, I'm going to put a card up there and a link in the description below, so be sure to check those out as well. And with that said, let's get into the question. Okay, so we have everybody's favorite, a cash book. So the following cash transactions were made by A. Khan for the month of March. Okay, instead of going through all these transactions and talking through them and then having to go back over them and populate the cash book, I'm just going to go through them and populate the cash book as we go along. So just know we have to do a cash book. Okay, so as you can see, I have my cash book format prepped down here. So I have my debit side with my details, folio, discount allowed, cash and bank columns, and the matching columns on the credit side as well. Okay, the first item given to us, right, contains the balances. Overdrawn balance at bank. A bank overdraft is a current liability, so that balance will actually be brought down on the credit side, as you can see here in the cash book, right? So on the credit side of the cash book under the bank column, because it's an overdraft, which is a liability, and liabilities have credit balances. The cash balance is 300. That's automatically assumed to be a debit balance. It could never be a credit balance unless there was an error, because you can't spend more cash than you have. You can do that with the bank account, hence the overdraft, right? Anyhow, let's continue. Now, on March the 2nd, we have two things happening here. Cash sales amounted to 550. Let's deal with that. If we make a cash sale, we are selling an item and we're collecting cash, which means our cash is going up. Cash is an asset. To record an increase in an asset, we have to debit the asset account. So we are going to go on the debit side and we are going to record, right, the receipt of 550 under the cash column. The details tells us where the money came from. It came from sales, and we put the date. Now, a lot of people have an issue. They think when they put sales on the debit side, we're debiting sales. Please note that is not the case. The inclusion of the word sales here tells us the other account affected by this transaction. This, what we're doing here, is the cash book. And when you make an entry on the debit side of the cash book, you are debiting the cash book, right? You're not debiting sales. Okay, the other transaction on this day was paid T. Ali by check, amounting to 700 less 5% cash discount. Right. So if we make a payment by check, first of all, bank is affected. Second of all, if we're making a payment, the bank account is going down. So we know we are going to record this transaction on the credit side, because bank is an asset. If it's going down or decreasing, to record that, a decrease in an asset, you have to credit the asset account. So we're going to see a credit here. And note, we are seeing it on the credit side with the value under bank as 665 and as a value under discount received of 35. How did I get that? If we go back to the information, we're seeing it says 700 less 5% cash discount. If you find 5% of 700, you'll find $35. And discounts are subtracted from the gross amount. So when you subtract 35 from 700, that's how we get 665, which is the amount actually paid to T. Ali by us. Okay, and again, this is an entry on the credit side of the cash book. This is a credit to cash book. It's not a credit to T. Ali, right? T. Ali, this tells us that a payment was made from bank, and this tells us who or what we paid. Okay, all right, let's go now to the next date, which is March the 5th. It said paid sundry expenses of 120 by cash. So again, if we're making a payment, we know our account is decreasing and we're making it out of cash. So cash is decreasing. Cash is an asset. To record a decrease in an asset, you have to credit the asset account. So we're going to go on this side and record that item like this. So you're seeing on the credit side, under cash, right, 120 was paid out and we used it to pay sundry expenses. Okay, next item. Okay, so on the 8th, we have a couple of things happening here, boy. Received check for $1,800 from P. Shivers after he had deducted 3% cash discount to which he was entitled. Okay, we'll come back to a cash check of $1,000 for office use shortly. Now, we received a check for $1,800. That's going to go on the debit side. Because why? If we receive the check, it means bank is affected. If we receive the check, our bank account is going to go up. Bank is an asset. To record an increase in an asset, you have to debit the asset account. Now, we are going to debit it for $1,800, but we have to figure out the discount amount. Do we just find 3% of $1,800? Well, no. You see, the 3% was already deducted, and the figure we got after deducting the 3% was $1,800. Now, how do we work out the amount prior to the 1,800, right? Because we have to figure out the discount. So what we do is we acknowledge the following. So think about it this way. The amount prior to the discount, right? When we subtract 3% from that, we're going to be left with 97%, the equivalent of 97% of the original amount. That 97% is the 1800 which we actually received. So if 1800 is equal to 97%, we could divide 1800 by 97 and get the actual pre-discount amount, which I think was 1850 something, right? I'll put it up in a little text box somewhere here. And then when we find 3% of that, it actually turns out to be like, I think 54, 55 or something like that, which is pretty close to what we had to find here, right? Let's put it up. Sorry, 56, right? So yeah, I was remembering. So 1856, right? So again, you can double check it. If you find 1856 and find 3% of that, right? The figure will be close enough to $56. So when you subtract it, you're going to get back the raw figure of 1800, right? Sorry, not the raw figure, the post-discount figure of 1800. Okay. All right, next transaction. On the next transaction on that same day was cashed a check of $1,000 for office use. Okay, so this is a contra entry. Why? Because we cashed a check, which means we went to the bank with a check, and on the check we wrote cash and $1,000 and signed it. So it's like an old-fashioned way of going to the ATM. So you go to the ATM, you put in your card, you punch in your PIN, and you want to make a withdrawal, and you get your cash, right? And don't forget to take your card. So before that, it was like writing a check. It was like a business writing a check to itself. So on the check, they used to write cash, put the amount, get the signatory to sign it. You'll go to the teller in the bank, and they will give you the cash. Okay, so that means money is coming out of bank, which means bank is decreasing. And to record a decrease in an asset, we have to go on the credit side. So we're going to see on the credit side, on the bank, $1,000 coming out. And it's going to cash. Remember, the details tell us where the money is going. In the folio column, you're seeing a C, which indicates it's a contra entry, which means that this 1,000 went to cash. So we have to look for a corresponding entry on the other side of the cash book, which we'll see right across from it. So on the debit side, under cash, right? And we're going to put the debit under cash because cash is increasing. We cashed a check for $1,000 for office use, right? So it means we're holding it in the office to use for office purposes, but we haven't yet spent it. So this is an increase in cash of 1,000. The money came from bank, and we're seeing a C, right, in the folio account, which means that it is a contra entry. You'll find a corresponding entry on the credit side of the cash book. Okay, cool. Now, the next item up was on the 12th. So it says, receive the check of $680 from S. Thompson in full settlement for goods sold, valued at $700. So we received a check for $680 from S. Thompson, right? If we receive the check, bank is going up. So we have to go on the debit side and put the entry for $680 on the bank. But it says in full settlement for goods sold, valued at $700. So if the goods sold were valued at $700, S. Thompson was supposed to pay us $700, but they're paying us $680 in full settlement. So full settlement means they've paid off. They no longer owe us any money. How is that possible? How could they pay less and now not owe us any more? What about the $20? That's discount allowed. So we now are allowing S. Thompson discount. So we're going to see this entry being put on the debit side of the cash book, right? So on the 12th, on the bank, because it was a check received from S. Thompson, check for $680, and the discount allowed says $20, right? And $680 plus 20 will give us back the original amount of $700. Next, on March the 16th, cash sales amounted to $400 and we paid wages. Okay, so let's take the cash sales first. So we had a cash sale before. So we simply have to go on the debit side and we're going to record the cash sale under cash $400 and put the details as sales, right? We're debiting because cash is increasing. It's an asset. To record an increase in an asset, you have to debit the asset account. Okay. Next item up, it was the wages of $800 paid by cash. Okay, so now money is coming out of cash. We have to go on the credit side because cash is an asset. To record a decrease in an asset, you have to credit the asset account. So on the cash on the credit side, you're seeing $800 and the money is going to wages. Nicely done. Next, on March the 20th, cash of $1,000 paid into bank. So this is another contra entry, and this time we're doing the opposite. So before we took $1,000 out of the bank for office use, and I guess we're putting it back. I don't know why, but okay. So cash of $1,000 paid into bank. So bank is going to go up because we're putting money into the bank. So we're going to have a debit in bank right, under the bank column on the debit side. And of course, it's going to say that it came from cash, right? We see in the folio column indicates that it's a contra entry, which means that the money came from cash, right? Which you can see here as well. Or rather, that there'll be a corresponding entry on the credit side of the cash book, which we will see here right now, right? On the credit side of the cash book, under the cash column, you're going to see $1,000 coming out of cash and going to bank. And the C in the folio column will indicate that it's a contra entry with a corresponding entry on the debit side, right? So money came out of cash and went to bank, and we are seeing it, here as well. The 1,000 here coming from cash. Nice. Okay, so we don't have too much again. I think this is the last transaction, as a matter of fact. March the 27th, check of $500 drawn for personal use. So anytime it's for personal use, that's drawings. A check means bank is affected. Drawn means, well, a check was drawn means they wrote up a check and it was for the owner. The owner was taking money for their personal use. So on the credit side, you're going to see that being entered because bank is an asset. If the owner is taking money out of the bank for their personal use, bank is decreasing. And to record a decrease in an asset, you have to credit the asset account. And the details will tell us where the money went, which is drawings. Okay, so those are all of the entries. Now we have to balance off the cash column and balance off the bank column. The discount columns are not balanced against each other. They are simply totaled and transferred to the respective accounts in the general ledger. So the total for the discount allowed account will go to the total for the discount allowed column will go to the discount allowed account in the general ledger. And the total for the discount received column will go to the discount received account in the general ledger. Now, how do we balance off the accounts? So we're going to add up. So we add up all the money coming in. That gives us $2,250. We're going to add all the money going out, $1,920. So if you have $2,550, or was it $2,250? $2,250 coming in, right? And you have $1,920 going out. To find out how much you have left, you're simply going to subtract, right? And the same thing for bank, right? We had about $3,480 coming in, and we had $2,865 going out. So you'll simply subtract to find how much you have left. And that's going to be the balance carried down, right, in either column. Or I suppose you could put 31st of March here as well. All right, lovely. So now all we have to do is total up both columns, both sides, right? So again, so you're going to see the cash columns total on both sides matching, and the same thing for the bank column total on both the debit and credit side matching, right? Not so for discount received and discount allowed because we don't balance them off, right? They're simply totaled and sent to the general ledger accounts. And of course, don't forget to bring down your balances here. And you can put 31st of March or 1st of April to indicate it's brought down in the start of the next period or at the end of the current period. Okay, so that's it for part A. Let's take a look at part B. Okay, so part B had some bank rec vibes. Let's take a read. On April 2nd, 2007, A. Khan received a bank statement from his bank for the month of March, which the month we just finished balancing of the bank, this cash book for, right? Which showed an overdrawn balance of $1,405. On careful examination, the following discrepancies were found. Okay, so the first item was that the bank had charges of $20 which were not recorded in the cash book. Next, we had the check of $1,800 received from P. Shivers on March 8th had been dishonored. Okay. The third item, upstanding orders for insurance premiums of $700 had been paid by the bank. This had not been recorded in the cash book. Okay, so those first three items are definitely going to be used to update the cash book. This last item here, the check for $500 drawn for personal use on March 27 was not among the cancelled checks returned by the bank with the statement. There was also no record of it on the bank statement, which means it's an unpresented check. So the owner wrote himself a check but did not cash it, did not go to his bank and put it in and get the money from the business's bank account. So that's an unpresented check, and that's going to be put in the bank reconciliation statement. So you know what we have to do. The first thing we have to do is the updated cash book, starting with the closing bank balance from the cash book we just did, and then following that, we have to prepare the bank reconciliation statement as at March 31st, 2008. Okay, so we're not gonna draw up a set of columns for the updated cash book. We're just going to keep it simple. We're just going to put the details and the dollar sign, right? So we have the balance brought down 615, which was the balance we just found up in the cash book in part A. Now, the first item, the bank had charges of $20 which were not recorded in the cash book. Before we get into it, if you need to know how to do bank recs or you need a refresher, you need to check out my bank reconciliation playlist, and I'm going to put a card up in the corner there. right? I promise you it's worth your time. If you struggle with bank recs, I break things down very simply, and I don't try to cram everything into one video. The videos are relatively long, but it's because I take things slow and I even give you questions to practice. Anyhow, back to this question. Right, so the bank charges are amounts the bank literally charges us to take care of our account. So they take money from us as payment for upkeeping our account. So that's money coming out. And if it was not recorded in the cash book, it means it's missing in the cash book. So we have to put it in. And if it's a charge, money taken out, it's going to go on the credit side of the cash book like this. Right, bank charges of 20 because it's a payment to the bank. The next item up, which was the check of 1,800 received from P. Shivers on March 8th, had been dishonored. A dishonored check is a check from which we did not get the money on. So somebody gave us a check, we went to our bank, we put it in, and they did their process and they said, hey, we actually can't get the money for this. So they sent it back to us and said, hey, talk to the person who paid that check. We weren't able to get the money. So it was dishonored. Right? Now, there could be different reasons for a dishonored check. Maybe the check was written incorrectly. Maybe they put a wrong date. Maybe they didn't sign it, or the wrong person signed it. Maybe there was an error in the spelling of our name, the payee's name. Maybe the amount being paid to us, that you have to put it in numbers or figures and words. Maybe those didn't match, or whatever the case was. Maybe there was a rip or some kind of stain, or maybe the person simply did not have enough money in their account to honor the check, to pay us what the amount on the check was. So if that's the case, we have to kind of undo the receipt. Because remember, we initially received this amount, which was put on the debit side of the cash book. So if we didn't actually get the money, we have to undo the debit. And to undo a debit, you have to go on the opposite side and enter the same amount, which is 1,800. So this will kind of counterbalance the initial debit of 1,800 from P. Shivers, right? The third item is a standing order for insurance premiums. Right, it had been paid by the bank, it had not been recorded in the cash book. So a standing order is an instruction we give to our bank to make a payment on our behalf at regular time intervals. It's a standing order. Please do this on this date or this often, right? So if it's a payment, it goes on the credit side. It was not recorded in the cash book, so what do we have to do? We have to record it in the cash book. So it's going to go on the credit side like so. Right, now, those are the only items. The item 4 was an unpresented check, and that's going to go in the bank rec. Now, clearly here, we have more money coming out than we have in. So what's going to happen is the balance is going to be carried down from the debit side and brought down on the credit side, which means we are in overdraft. So you're going to add up all the amounts here and subtract the 615, and that's going to give us a balance carrying of 1905. Now you add up both columns, you get the same figure of 2520 for the total, and you bring down your balance of 1905 overdraft. Okay, let me just rearrange some stuff and pull up the bank rec very quickly. Right, so I'm going to do the bank rec two ways. Now the instruction just said prepare CAN's bank reconciliation statement as at March 31st, 08. You have both the updated cash book balance and the bank statement balance. So you can start with either one. Right, now again, I would strongly suggest you check out my playlist because I teach how to do it both ways. I find doing the bank rec with the bank statement balance first to be very intuitive if you've learned how to update a cash book. Because when we start with the bank statement balance, it's like updating the bank statement balance. Right? When you start with the updated cash book, you have to kind of undo stuff from the cash book. Right? Either way you take it, you're supposed to get the same answer, and I'll do it both ways here. So the balance as per bank statement given to us was an overdrawn balance of 1405, right? I put it as a negative balance because that's what it is. We owe the bank money. Now, again, there was one item, right? It was a check for 500 drawn for personal use was not among the cancelled check. In other words, it's an unpresented check. So if you start with the bank statement balance, you now have to adjust the bank statement balance in a way to actually capture what would happen when this check actually hits the account. In other words, when this check gets to our bankers, what's going to happen? Is money coming into our account or is money going out from the account? Well, it was a check drawn on behalf of the owner for personal use, which means money is coming out. So if you already have a negative balance and you're taking more out, the balance is going to get more negative. So your overdraft is going to increase, right? So I have less unpresented checks and there was only one item. And guess what? We get the same balance as per updated cash book as we have there. As we found in the previous part of the question, right? We got the 1905 overdraft. Okay, so again, we started with an overdraft of 1405. the payment would cause the overdraft to increase. So you're adding two negative figures, right? And that gives us a bigger negative figure, right? So now I'm going to show you how to do it, starting with the updated cash book balance, right? So we're going to start with the negative 1905. Now, the unpresented check represented money coming out of the cash book. But the check was not presented, so it means the money didn't come out of the bank account yet. So cash book wise, when we put the credit to represent the payment, our cash book balance went down. But the bank statement balance didn't go down because the check was not presented to our bank account yet. So in order to get both of these to be the same again, or to reconcile them, we could either subtract it from the bank statement balance, which we just did in the previous bank record I did, or you could add back the amount taken out of the cash book balance. Or when you add back the amount, it's going to match the bank statement balance. Because remember, at the end of the day, what you're trying to do is equalize or equate the information in both places, the cash book and the bank statement. That's why we updated the cash book. We put in information in the cash book that the bank statement had, but the cash book did not. So now when the cash book has that information, the information will be equal. But then there'll be information in the cash book that the bank statement doesn't have. So you can either put the information in the bank statement that was missing, which is what we did in the previous bank rec, or you could remove that information from the cash book, and what will be left would match the bank statement balance. So here, we're going to remove it, right, by adding back the unpresented check, and we're going to get negative 14. So again, this is how I do it, because to me, I approach it from an arithmetical perspective and a kind of, what's the word looking for? A contextual perspective. We have a negative balance, and we're putting money back in. So it's like a negative plus a positive. So we're going to get a less negative balance, right? I know some teachers give you all sorts of different instructions based on an overdraft. That's all well and good. If you like those instructions, that's fine. Cool. You do what you're comfortable with, right? But again, like I said, I strongly suggest you take a look at the way I recommend you understand it, and hopefully it'll make sense. Most times it does, right? If it doesn't, stick with what you know. Anyhow, guys, that's the end of this question. Okay, guys, so there you have it. That's the solution for question 2 from the May 2008 POA Paper 2. If you have any further questions on it, please feel free to leave them in the comment section below, and I'll get back to you when I have a chance. If you want to check out any more videos, I'm going to put some cards up here. Don't forget to subscribe, and be sure to check out my website where you'll find some pretty useful POA handouts. Anyway, guys, as per usual, thank you so much for watching. Take care of yourselves, and I'll see you next time. Bye.